Hello dear children. Now in this video we will discuss about fiscal policy. You should know that central bank of any country tries to regulate the market because business cycle is a continuous process. Okay, so business cycle in this you can see many kind of fluctuations out here. Okay, that is there are some stages like recession, recovery, peak or boom stage, and depression. So this cycle it continues. Okay, so to regulate this situation, okay, and to control other factors as well, okay, like your inflation, deflation, okay. So uh, like this deflationary gap, okay, or inflationary gap, central bank of any country follows two instruments, okay, or it uses two instruments. One is called monetary policy and the other one is called fiscal policy. Okay, so this fiscal policy is related to, you can say basically it is related to the taxation policy. You can also assume it to be. Okay, so let us try to understand what things are there in fiscal policy now. So first topic, the public finance. So what is public finance now? Public finance is the study of revenue and expenditure of the government at the central level, at the state level, and the local levels. Okay, by central we mean the at the center level, that is the level of the central government. Okay, and by state we mean the at the level of the state government. Okay, and by local levels or that this local bodies we mean the gram panchayat, okay, or the municipal corporation. Okay, so that is your local level. So when we study about the revenue and the expenditure of the government, that is known as your public finance. Okay, now what is fiscal policy? Fiscal policy, as I already said, that it is a type of a policy which the government along with RBI is related to the taxation policy. Okay, so it is defined as the policy under which the government uses the instruments of taxation, public spending, and public borrowing to achieve various objectives of economic policy. Okay, so there must be some kind of objective uh, of the government under economic policy, like better infrastructure, economic growth, high per capita income, okay, employment generation. So varieties of objectives are there. So just to achieve this kind of objective, okay, the government uses the instruments of taxation, public spending, and public borrowing. Okay, so that is your fiscal policy. Okay, now the tools of fiscal policy. The effective and the good fiscal policy uses various fiscal tools like this taxation, expenditure, and public borrowing in a proper combination so as to achieve the best possible result in terms of the desired economic objectives. So whenever a country or a government, it wants to use the fiscal policy, okay, that is to be effective, and the good policy, or you can say the better fiscal policy, then it combines the tools like taxation, okay, that is related to the taxation policy, okay, and your expenditure as well as the public borrowing, because this public borrowing it can uh, increase the liability of the government. Okay, and by this spending money, this expenditure is actually where the government makes the uh, I, I mean where the government spends the money, okay, for building of the dams, okay, construction of the roads, okay, um, having nice infrastructure, okay, medical facilities, etc., etc. Okay, now what is public revenue? So in the context of this fiscal policy and the public financing, we have to study about the public revenue. And by this public revenue, we simply mean the income of the government from all its sources. Okay, whatever the sources are there for the government to generate the income is known as your public revenue. And what are the sources of the public revenue? There are two main sources. That is, one, taxation, okay, and the other one is the non-tax revenue. Okay, this uh, the sources are tax revenues and the non-tax revenues. Okay, and in chapter budget, we have already seen what are the sources of the government. Okay, this revenue receipts and all, we have already discussed this part, right? This revenue receipt. So that is your tax revenues and the non-tax revenues. Okay, you already know what are non-tax revenues, like the interest, dividends, etc. Okay, so what are the instruments of fiscal policy? Now, as we have already discussed out here in the definition as well, that the tools are taxation, expenditure, and the public borrowing. So these are the instruments of the fiscal policy. That is, number one, taxation, number two, public expenditure, and number three, public borrowing. Okay, so these are the three instruments of fiscal policy. Okay, now what is tax, by the way? So tax is actually a compulsory fee or a financial charge that is levied by any government on an individual or an organization just to collect the revenue for public works. Okay, for providing the better facilities and infrastructure. So that is called tax. So whenever the government it collects income tax or GST, excise duties, custom duties, okay. So with this tax revenue, okay, with this tax receipt, what the government it does, it now spends the money for the better infrastructure, for providing better facilities. Okay, like we enjoyed this free vaccination, okay, free COVID vaccination, right? So how the government is able to provide this facility, the free vaccination, through the tax collection. So if the government can collect the tax 100%, then it will be better for the government only. But sometimes the people, they don't want to pay tax and they just want to escape from this. So this is not good. So as a responsible citizen of our country, we must pay the tax. And in fact, we should remember that we all are the taxpayers, by the way. Okay, whatever be the level of our income, we all are the taxpayers. Even you are a taxpayer, because when you purchase pen, okay, when you purchase shoes, clothes, okay, or if you go to any restaurant, you eat something out there, okay, so you pay the tax in the form of GST, isn't it? So you are a taxpayer. Okay, and the definition of the tax has been already discussed. So I'm moving towards the next topic, that is the nature of the taxes. So what are the features of the taxes? The feature or the nature of taxes are: number one, compulsory contribution. So tax is actually levied upon any individual or any organization and is made compulsory. Okay, you must pay the tax. And there are varieties of taxes are there, like income tax, okay, this property tax, okay, this GST, service tax, okay, excise duties, custom duties, etc. Okay, so there are varieties of taxes are there, and it should be remembered that tax is a compulsory fee that you must pay to the government. Okay, so that the government can, now after collecting the taxes, it will provide us the better facilities and infrastructure. Okay, so that is your point number one. Now point number two, the another important feature of the tax is that personal obligation. Okay, So it is a duty of the taxpayer, as I already said, that being a responsible citizen of this country, you must pay the tax. Okay, so it is your personal obligation. You must pay the tax. Okay, as a responsible citizen of this country. Okay, and number three, general benefit. By general benefit, we mean that with this tax collection, okay, when you are paying the tax, the collected amount of tax will be used for the society, for the betterment of the country. For example, the government will put on these street lamps. Okay, so since you are the taxpayer, so you will only be able to use that street lamp. No, it's not that. That street lamp is for all. Okay, it's for the general public. So when you are paying the tax, it should be remembered that whatever the amount of tax you are paying, okay, that is for the betterment of country. Okay, and that facility will be used by the general public. So that is your general benefit. Okay, that the people, I mean the general public, will be able to use those facilities that has been provided by the government after collecting the tax amount. Okay, now point number 4, no quid pro quo. What does it mean? It means that the government will not give you any kind of guarantee that the government will provide the better facility. Okay, after paying the tax, okay, when you are paying tax, it should be remembered that the government may or may not be able to provide you the better facility that the government has uh, promised to. Okay, because government has many types of expenditures to make. Okay, this defense expenditure. Okay, and sometimes the country India, it provides medical facilities and other types of humanitarian aids to different countries like Afghanistan. Now uh, thousands of tons of wheat were provided by India to Afghanistan. So that was your humanitarian aid. And India, it provided COVID vaccines for free of cost to the countries like Nepal, Bhutan, Bangladesh, and Sri Lanka, and some African countries. So it has so many areas where the government has to make the expenditure. So by no quid pro quo, we mean that the government will not uh, is not promising you something that when you are paying the tax, so you will get the facility. Okay, so it's not like 100% give and take relation. Okay, so as you can see out here, I don't know why it's missing out here. So uh, let's just discuss about this the types of taxes, okay, or the classification of taxes. There are two bases, that is your traditional basis, and the other one is on the basis of progression. Okay, so as per the traditional basis, the taxes can be of two types, that is your direct tax, and the other one is your indirect tax. Okay, when I'll provide you the PDF, I will try to, obviously I will edit this part. Okay, I will fix this. Okay, so as per the traditional basis, okay, there are two types of taxes. One is called direct tax, and the other one is called your indirect tax. Okay, and on the basis of the progression, the taxes can be of four types. Okay, number one, proportional tax. Number two, progressive tax. Number three, regressive tax. And number four, digressive tax. Okay, so what are they? Let us discuss them one by one. Now, what is direct tax? Now, direct tax is the tax which is levied on the income and property of a person or an organization. Okay, for example, income tax, corporation tax, property tax. Okay, so this income tax is actually levied upon a particular person. For example, me. Okay, so I have to pay the income tax, obviously. So this tax, I mean, the burden of tax is uh, falling or is being charged on my income directly. Okay, So that is known as the uh, income tax. Sorry, the direct tax, because the burden of the tax, it directly falls on the person, okay, the individual or an organization. So for organization, it is known as the corporation tax or simply corporate tax, okay. And sometimes the property tax, same thing. This it can be for individual as well as the corporate body or an organization, okay. So that is your direct tax, okay. Remember that the burden of tax, it directly falls on the individual or an organization, so that is called your direct tax, okay. What is now indirect tax? uh, the burden, okay, in this case, in case of indirect tax, the burden, it can be shifted from one person to the other person, okay. So here the burden can be shifted. For example, if I am a shopkeeper and you are my customer, okay, so uh, I must pay the tax, okay, to the government, okay, in the form of GST. But what I will do as a shopkeeper, I will shift the burden to you. So when you are purchasing anything from my shop, you must pay the GST, okay. So this burden has been shifted, isn't it? So this is known as the indirect tax, okay. And this indirect tax is actually upon the expenditure that is made by the public. When you are purchasing any kind of electronic items like this mobile phone, okay, you must pay 18% GST, okay, be it IGST of 18% or CGST 9% plus SGST 9%, okay. And if you are going to KFC, okay, any kind of restaurant, then you must pay the GST of 2.5%, okay. So that is your GST rate. So we have different slabs, okay. For food items it is 2.5, for electricity for this electronic items it is 18%. The maximum slab is up to 25%, okay. Now the next, proportional tax. What is proportional tax? Now when the rate of taxation remains constant at all levels of income, it is known as the proportional tax. Let us say that your income is 10,000 and the tax rate is only 10%, okay. And with this increase in income, okay, let us say that your income increases from 10,000 to 15,000, 20,000, 30,000, 40,000, okay, 50,000, the rate of tax will remain constant, okay, whatever be the level of income, okay. If it is increasing or decreasing, it doesn't matter, the rate of tax will remain constant. So that is known as the proportional tax, okay. Now the other one, progressive tax. As the name it suggests, that progressive, okay, it will progress, which means with the uh, with this increase in the income of a person, the rate of tax also increases, okay. Let us say that previously your income was 10,000, the rate was 10% tax rate, okay. Now your income is 15,000, so your tax rate will also increase. It may go up to 11% or 12% or 15%. So your income increases as well as the tax rate increases. So this type of tax is known as your progressive tax, okay. The last one, regressive tax. Now what is regressive tax? So this regressive tax is just the opposite of progressive. What happens in the regressive tax? With the decrease in the income of the person, the tax rate also decreases, okay. Previously your income was 10,000, the tax rate was 10%. Now your income is decreasing, let us say 8,000, 7,000, 6,000, 5,000, okay. So with this decrease in your level of income, the tax rate also decreases. So this is known as the regressive tax, okay. Now what are the merits and demerits of direct taxes? Merits, the advantages, that is, okay. Number one, economical. So the direct taxes are economical in a sense that the cost of collecting these taxes is relatively low, as they are usually collected at source and they are paid to the government directly by the taxpayers. Uh, while doing this chapter, this thing, redemption of debentures, okay, I hope you have gone through this term TDS. Okay, so this TDS is actually your tax deducted at source. For example, like my salary, okay, in my case, whatever the amount of salary that I get, okay, some portion of tax is already cut down in the beginning only, in the at the source. So that is your TDS, that is the tax deducted at source. So the one of the advantage of the direct tax is that it is deducted at source only. Okay, so the cost of uh, collecting this tax, it reduces, so it becomes economical. Okay, and number two, certainty. So this direct tax can satisfy the canon of certainty, which means the taxpayers know how much they have to pay and on what basis they have to pay the tax. Okay, so it will give you a certain number, a fixed number, a constant number. Okay, so as a taxpayer, you will know beforehand that on what basis your tax will be deducted, okay, and what amount of tax will be deducted, what amount of tax you must pay. Okay, so that is about your certainty. Okay, now the other advantage of the direct tax is equitable. Okay, so the direct tax can be made to conform to the principle of ability to pay by choosing the appropriate tax rate schedules. So this you must have heard uh, about the income tax slab. Okay, so if your income is more than 2,50,000, okay, if your income level is more than 2,50,000, then uh, whatever is the excess, okay, whatever is beyond that 2,50,000 up to 5 lakh, okay, you must pay a certain rate. Okay, and beyond 5 lakh you must pay a certain amount of money. Okay, so that is your equitable. I mean the direct tax is equitable. And point number 4, reducing inequalities. So the see now this inequality is one of the biggest problem in every economy. Okay, not only in the case of India, but in all the uh, economies, like be it in the economy of China, Russia, US, UK, Australia, India, Pakistan, Nepal, Bhutan, Sri Lanka, etc., etc. So inequality is one of the biggest problem. Okay, by inequality we mean inequality in various uh, areas. Okay, and the best example is that the inequality in the income distribution. Okay, unequal level of distribution. Okay, and because of this, the uh, I mean the rift between, okay, or the gap between the rich and the poor, it widens up. Okay, and that gap is known as the economic gap, isn't it? I have already explained this term economic gap in class 11. I hope you remember that part. Okay, so this direct tax will actually reduce the inequalities. Okay, so now why it is so? Because for the rich people, the tax rate is very high. Okay, and for the low level of income, I mean the low level income group, they have to pay the low amount of tax rate. Okay, like those who don't earn per annum up to 2,50,000. Okay, 2,50,000. Okay, if your annual income is less than 2,50,000, so then you don't have to pay the tax, you don't have to pay the income tax. Okay, but if your income is more than 2,50,000, then whatever is the excess amount, okay, on that amount the tax will be collected. Okay, and obviously the rich people will earn more amount of money, isn't it? So the more amount of money, more the income, more the tax rate in case of direct tax. So it will help you to reduce the inequalities now, because the rich people will pay high amount of tax because they have high level of income, and the low income group will pay low amount of tax rate because their level of income is less. Okay, and those who earn less than 2,50,000 per annum, they will pay less amount of tax. Okay, uh, you can go through this point, this elastic, okay, and this civic consciousness. Okay, you can go through that particular section. Now, the what are the disadvantages? Okay, the demerits or disadvantages of direct tax. Okay, so number one, it is unpopular. Okay, why it is unpopular? Because these taxes are actually levied upon or charged upon the individual's level of income and property. Okay, and it cannot be shifted. Just like in case of the indirect tax, the burden, it cannot be shifted from one head to the other head, that is from one person to the other person. It cannot be shifted. Okay, so uh, with high level of income, they must pay more amount of tax. Okay, so this will discourage the people to earn more money. Okay, and that's why it is unpopular. Okay, now there is a possibility of the tax evasion also. Okay, uh, like in this income tax act only. Okay, there are some clauses I forgot. When I was a student in college, I had studied, but I forgot, I'm sorry. mm, there are some clauses, okay, 44D or something like that, it's there, the clauses are there. So according to that, according to those clauses, uh, this tax can be evaded. Okay, you can evade from the direct tax. Okay, you can evade yourself from paying the income tax. So there are some areas. For example, if you donate your level, okay, your income, okay, if you donate let's say 50% of your income for charity work, okay, then you can evade the tax. Okay, the government will look after your details of accounts, and will obviously will find out that this person is making the donations. Okay, so then the tax can be evaded. Okay, you can escape from this tax. Okay, number three, the next part, inconvenient. So the main drawback of indirect tax is that they cause a lot of inconvenience to the taxpayers. Now this the uh, sometimes the taxpayers are required to pay entire tax in one installment. Okay, sometimes they have to pay huge amount of tax. Okay, but however, at present, government of India has decided that the tax can be paid quarterly or half yearly, as well as this annual part is already there. Okay, but if you have to pay the uh, entire amount of tax at once, then it becomes inconvenient for the people, because a huge amount of money has to be paid at once. Okay, so because of this, there is the case of inconvenience for the taxpayers. Okay, and point number four, this adverse effect on will to work and save. So as I already said in point number one, this unpopular. Why it is unpopular? Because the tax cannot be shifted from one person to the other person. So it will discourage the people to work less and earn less. So it will have the negative impact on your work as well. Okay, because the more you earn and you save the money, okay, you must pay high rate of tax rate. So this will discourage the people to work and save extra amount of money, because you have to pay the tax rate, I mean high amount of tax. So you can go through this point number five, arbitrariness, and point number six, narrow in scope. Okay, so by this arbitrariness, which we mean that this tax can be manipulated. Okay, so and it is difficult, by the way. Okay, so in fact this CAs, they had a hard time understanding GST when the GST was implemented. Okay, it was untimely, and in an unplanned manner the GST was implemented. So there were some, there were many problems, and more than 20 times this GST has been, I mean, the changes have been made more than 20 times since the implementation of GST, because there were so many problems with the GST. Okay. And what are the advantages and the disadvantages of the indirect taxes now? So let us see one by one the merits and or the advantages. So what are the advantages and the disadvantages of indirect taxes? Okay. Mm, number one, advantages. Convenience. By convenience, we mean that the indirect taxes have the like they are paid in small amounts. By the way, okay, when we are paying the tax rate is very very small. Okay, for example, if you go to KFC and mm, eat worth rupees 1,000, let's say, okay, so you must pay the tax at the rate 2.5% GST. So how much you have to pay? Only 25 rupees. Okay, so that is your convenience part, because the tax rates are very very small, and the amount in fact it will be smaller. Okay, so point number two, elastic. So we already know that we have different slabs or the tax rate, I mean the GST rate of different products. Okay, like for food items, as I already said, it is 2.5%. For electronic items, it is 18%. So the tax rate, it varies. So it is elastic in nature. Okay, and in some items, and on some items like this educational items, okay, no tax will be levied. However, they say that I mean the government, they don't charge any kind of tax, but indirectly they are doing so. Okay, so there are some ways that the government is charging or levying the taxes. Okay, there are some ways. Now, point number three, less of tax evasion. Yes, in case of the indirect taxes, you cannot I mean there is no escape route in the case of indirect tax. Just like in case of direct tax, we saw out here that tax can be evaded. Okay, this direct tax, but not the indirect tax. You must pay the tax when you are buying something. Okay, you are paying indirect tax, isn't it? So there is no escape route. If you are purchasing petrol of rupees 120, then in that 120, okay, excise duty has been already levied. Okay, because this petrol is excluded from GST. You know that, isn't it? So you must pay the indirect tax. You have to. Okay, if you are buying a mobile phone, then without paying GST, you cannot purchase the product. So whenever you are buying anything, okay, like this thing, any kind of electronic good items from this online shopping, say Flipkart, Amazon, etc., etc. So you must have noticed that the item, I mean the amount is written, let us say 1,000, and within sorry, and inside the bracket something is mentioned. And what is that something? That is known as the inclusive of all the taxes. So which means that the indirect tax has been already included in the price of the product. Okay, so you cannot escape from the tax. Okay, so there is less chance of tax evasion. Okay, and point number four, wide coverage. Okay, so the indirect tax has to be paid by everyone. Okay, as I already said that even you are a taxpayer, even you are purchasing the sorry, when you are purchasing anything, okay, when you are purchasing something, then you must pay the tax. Okay, you must pay the tax. So it has the wide coverage. Okay, only few group of people have to pay the indirect taxes. No, it's not like that. It has got a wide coverage. Okay, Then you can go through this point, equitable, okay, increase in social welfare, this promote production and investment. So you can go through these points. uh, Feel free to ask me if you have any kind of issue with that part, okay. And let us talk about the demerits or the disadvantages of the indirect taxes. uh, Point number one, regressive and unjust, okay. So actually the indirect taxes are imposed or levied or charged on the level of consumption. So if your level of consumption is less, okay, then you must pay that less amount of tax, okay. And there are some uh, examples. Okay, let me just give you the very simple example. You want to purchase the mobile phone, okay, online, and the price is 10,000, okay. So you must pay the GST of 18%. So uh, the government will not see whether you are a rich people or a poor people. It doesn't see to that part, okay. So be it the rich section of people or the poor section of people or the middle class, they must pay the same rate of tax, that is 18% GST, okay. Like we are paying huge amount of tax for this petrol. So uh, like we are earning, okay. So we can afford to purchase the petrol, but those who are below this low level of income people, so uh, they will have a hard time, because even they have to pay the same amount of tax, okay. So this is your regressive and it is unjust. So I personally don't like this indirect tax. I personally think this indirect tax should be reduced or it should be minimized, because 18% GST is it's really very high, okay. Because students, when they want to purchase laptops, mobile phone or iPad, whatever, uh, they have to pay the same rate of tax as the filthy rich people are paying while buying the product, okay. Now this indirect tax, it has one of the disadvantages, sorry, one of the disadvantage, that it is affected by the inflation, okay. By inflation we mean the rise in the price, okay, of the general products, okay, general increase in price level, that is known as the inflation, okay. And deflation is just the opposite, that is decrease in the price level generally, okay. So this indirect tax is affected by the inflation. If there is high level of inflation in market, there will be high level of uh, tax amount, okay. But if there is deflation in market, then the tax rate will also be deducted. So this indirect tax is affected by the inflation. As we already know that economic cycle or business cycle, it is a continuous process, okay. Like this recession, recovery, peak, or boom stage, or this depression. So it is a continuous process. So in this thing, okay, in this process, this inflation is also there, okay. Inflation also has a very important role to play out here, okay. So indirect tax is affected by your inflation. Remember, point number three, uneconomical. So this uh, the process of collection of the indirect tax is complicated, okay. And huge amount of cost is involved in the collection of this, okay. So it is uneconomical. Like in case of the direct tax we saw out here, that it is economical. Why it is economical? Because the tax is already deducted at the source, that is TDS, tax deducted at source. So when the tax is deducted at source, what happens is that the cost of collecting such amount of tax becomes cheaper, okay. It becomes economical. But whereas in case of the indirect tax, tax is not deducted at source, but it is collected. Okay, so there are some loopholes out here. Okay, that it becomes very much costlier to collect the amount of tax, and there are some cases where the uh, tax money, it cannot be deposited to the government account. Okay, so sometimes there are some cases in this area. Okay, so we can see point number 4 and point number 5. You can just go through this. Okay, it's about uncertainty and lack of civic consciousness, so please go through this particular section. Now the next part is your this public expenditure. Okay, so let us do one thing. Let us continue in the next video.